What's going on, my fellow traders? Welcome back. This is X Factor. Today, I wanted to talk to you about a model that I've been utilizing that has been working very, very, very well for me. I want to share this with you guys and see what you guys think. Have you guys go through your charts, try to pick these areas out, show me your entries, see how it's playing out for you guys. I have used this model multiple times to pass funded accounts fairly quickly, 1, 2, even 3 days, and I'm done. Obviously, it's depending on your risk tolerance. Not everything's perfect. There are losses in trading, but this model has a very high win rate. I want you guys to, when we're done, repeat this throughout your charts and see what percentages come up for you. So let's dive right into this. Today we had this model play out beautifully. This is a very quick model. It's in and out, 15-minute CRTs and higher time frame areas, specifically the previous day high and the previous day low. We are going to go through the protocols here right now. On the screen, we have our first point. We're going to focus on 5 specific points. One being we are waiting. We are waiting for previous day high or previous day low to be swept. Okay, that's number one. Number two, we wait for a 15-minute CRT to be formed. Number three, this isn't always something that you need per se, but it does add a much higher win rate. SMT with the correlated pairs. And finally, number four, well, not finally, I think we have one more. We're going to go to the lower time frame, 1 minute, and we're going to look for our entry model. Now, 4 and 5 kind of play into each other here. So you got your number 5 is enter on your entry model. This could be, your CISD. This could be your order block, market structure shift, IOVGs, breaker blocks, etc., etc., etc. Okay, so we're going to leave that right there. Now, a very important caveat to this, and it's almost a prerequisite to these points that I just annotated for you here. We're going to have a very important prerequisite to this. When we're looking for that 15-minute CRT at the previous day high or low, we will not be trading this model if the internal range liquidity in that leg up has been rebalanced. So let's put that down here. Don't trade if the price rebalances, okay, the internal range liquidity of the leg up into PDH or PDL. Okay? Do not trade if the price rebalances the internal range of the leg up into the PDH or the previous day low. If you open up your charts, for example, here, okay, you guys want to screenshot that if you want. I'm going to get this stuff sort of out of the way here. Let's see if we can just move this up higher. Roll over to the side. Okay, much better. So there it is right there. Those are your protocols and your prerequisite trade. So getting back to what I was saying, if we are going into the previous day high and there's a rebalance of the 15-minute internal range, you are not trading this. Because usually if the internal range gets rebalanced, we push right through it. So we want to look for an example like what happened today. You can see after we swept the 9 o'clock candle at 10 a.m., we had an expansion leg up on the 15-minute. And on the way up, you can see the imbalances that were put in. We have 1 not rebalanced. We have 2 not rebalanced. And if you look very closely, there's this little imbalance right here. Imbalance number 3 that was not rebalanced, okay? So let's take our little trusty replay tool. So I'm coming to the charts. if you're away from the charts, can't really stare at them from the open, it's a good strategy, good model for you guys. Again, I use this model to pass fundeds all the time. So, but you could use this as your everyday strategy. Not every day you'll see this opportunity come up during the New York session. Sometimes the sweeps do happen overnight. So use it as you guys trade. Some of you do trade London. So let's take a look at what actually happened here today. We had this beautiful leg up. Imbalances not rebalanced. So prerequisite cleared. Green light. Okay. Wait for PDH. We hit the PDH. Wait for the 15-minute CRT. So we're going to play out this quickly. Okay. This is 3 minutes have gone by. We are now, we started at the 8:45 candle. We're 3 minutes into that candle. We have a CRT that formed, right? Right at that high. Beautiful. Okay. We took the high. We turned back into the range. Same thing on the ES. The ES pushed a little further up. So we got number 2 done. 3 is SMT. So let's see if there is an SMT here. And there absolutely is. So you have these highs here at 2:45 on Wednesday that were taken on the ES. And those highs at 2:45 were not taken on the NQ. All right, so there is a SMT forming. Now let's take a little closer here. So we have nice little order block happening here. We have an inverted fair value gap happening here. And we're going to just watch and see what price does. We have all our protocols hit, all 5, even the SMT. Now, again, as I mentioned earlier, if there isn't an SMT, you could still take it. That's up to you and your risk tolerance. I do love to see SMTs because it just adds more complements and the win rate is much higher. And that goes for most models with the SMTs. So let's take a look here on the 1 minute and we will continue to watch price action. Still, if you notice, there is no rebalance of anything. We're going to come back in. I am probably taking, usually the way I trade this is I try to get in on the order block, but for those of you who are a little bit more aggressive, we can take the inverted fair value gap. For this example, I'm going to take the inverted fair value gap, and we're going to run this price down to that rebalance level on the 15-minute chart. Okay, that gives us about almost a 4-to-1 risk reward. Let's see how this plays. We get triggered beautifully. We also put in, if you miss this inverted fair value gap entry, it comes back, it touches the order block, and it puts in an SMT right there on the lower time frame, which is even better. For those of you who take partials, you could take partials right at the low of the 15-minute CRT, let the rest run, and we get our full target hit. Generally speaking, I do take partials. In these types of examples, there are 2 ways you could trade this. The way I typically trade it is I'm looking for usually at least a 50% internal range rebalancing on the leg up from the 15-minute chart. So this leg up, I would like to see price come back into this internal range. Okay, doesn't happen all the time. It depends on the price action. We don't know where we're going to get, but the first TP should be the low of the first 15-minute CRT, right? It's about 50% of your profit target. Your TP2 is the highest internal range liquidity, right? We're still in a premium zone here, right? Usually price likes to rebalance into a discount zone. So this would have been an ideal long if that's the way you trade, but because we do have the draw on liquidity a little higher, in this specific example, I think there's a Wednesday CPI news above us. We don't know if we're going to get there, but we're trading today. So let's focus on today. This price comes back down. You could take your full TP here. If you want, you could extend this down to this internal range. If you do, most of your position is out. And in this example, we don't get there, I don't believe. Right, so you get stopped out. But for me, I'm taking out 80% of my position right here on my target, and I'm letting most of it run to the next level. It depends on how you trade and what you're looking for. So that's essentially the entire trade there, guys. This happens over and over and over and over again. I want you to dig into your charts. Not every circumstance is this clean. There are other situations where the previous day high does hit and we form a CRT, not quite at the highs, but sort of around the highs. So it depends on how you get used to this model. This was a pretty textbook model for me this morning. If you guys are trading funded accounts, you know, you're getting 70 ticks here. I mean, that's $1,400 there. If you're trading a 50K account on Top Step, on one contract here, you're doing $1,500, which is half of your profit target goal to pass. You know, you need I believe you need 3,000 for that. So that gives you $1,500 right there. And based on their consistency rule, you could only do 50% a day. So it would take you two $1,500 days to break that 3,000 threshold. In this case, you got it in one day. And you wait for these setups. You take them, and they're very, very high probability. Previous day highs are extremely, extremely important levels of liquidity. And that's pretty much it, guys. So dig into your charts. Go through your daily charts. Find swing highs or swing lows. If you could find a daily swing high or low with a PD array and include it into it on top of that. For example, we had, let's do a quick rundown of another one. I won't do the whole protocol, but I can show you an example. This is the daily chart. On Wednesday during CPI, we pushed right into this daily high here on Tuesday into a daily fair value gap. And if you dig into the price action on Wednesday at the CPI high, you can see that there was most likely some form of 15-minute CRT that occurred on that day, and you can find your entry, and I bet you it works out. So again, short video. I'll continue to post some of these trades as they present themselves. Take a look at this video, practice it, go into your charts, do some FX replay or on TradingView, and let me know what you think. Drop me a DM or hit me up in the soup room, and we can talk more about this. If you like it, if you don't like it, if you notice some things that are beneficial to your trading, if these videos are helping you kind of figure out your own models. This model for me, my personality is very important. I like to be in and out of trades. I don't want to go to sleep knowing that I have an open trade on a 4-hour that's going to take me until next week to finish the price move. Right? I want to get in, I want to get out, I want to get done with my day, I want to hit the gym, I want to go hang out with my wife, etc., etc. So for those of you who don't like to be glued to the screen, you could use this as a point of reference and an area to just take trades without having to be stuck on your monitors all day. You could add this to your entire portfolio of entry models. So let me know what you think. Try it out, and I'll be in the group chats or hit me up on DM. All right, guys. Thanks.